Hey, everybody. What's up? What's up? What's up? Good afternoon. Good afternoon. Whew, another crazy day. All right, let's do the disclosure so I can talk. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. That's a funny one, Dave. I haven't seen that one in a while. Position disclosure is the same, except I got stopped out of Roblox, basically at the bottom. Annoying. Annoying, but you got to manage your risk because the market was really losing support today. So, um, I followed my game plan. I did the right thing. I got out where I was supposed to, and it just happened to be selling the bottom on a pretty big position too. But it is what it is. Stock was super weak, and the market was super weak for a lot of today. Um, Going to Las Vegas on Thursday. Pat's gonna do the afternoon meeting on Thursday. I'm doing conversations with the pro trader tomorrow with Greta after after the market closes. So if anybody's on YouTube, if you're used to listening to me on YouTube, I will not be live streaming the afternoon meeting tomorrow because I'm doing conversations with the pro trader with Greta. Um, and then Thursday, Pat will do the afternoon meeting. I'm heading out to Las Vegas. I hope some of you guys are coming. I think a few of you guys are coming out. Doing the Market Minds Summit. It's pretty cool. I'm gonna be speaking with some pretty solid people. Who's speaking at this thing? Hope some of you guys are coming. These ponytail dudes. This guy that got blown up by Wall Street Bets. I don't know who this guy is. Some hedge fund person. I think I've heard of this person, but I don't know who he is. But yeah, there's some solid people in here. I'm being sarcastic with a little bit, obviously. Brian Shannon, I'm actually super pumped to meet. Been recommending his book, this one, Technical Analysis and Multiple Time Frames forever. So that should be a really good one. This guy, we've been talking about him a lot here in the VTF and looking at a lot of his data on market dynamics, which I have found really interesting and really beneficial. So it'll be cool to meet him. Yeah. Oh, that guy. This is gonna be the best one. I'm pretty sure. This one right here. So you don't want to miss that one. Yeah. So it should be good. Hope to see some of you guys out there. I'm flying out Thursday. I'm flying back on Sunday. Any other announcements, or did I cover it? I think I covered it. So let's talk about markets. So it's a really interesting trading session. Obviously, we have the Fed tomorrow, so the Fed can change everything. We're gonna be on pause tomorrow. There's gonna be no interest rate hike. Um, like we always talk about when we're coming into these events, it's the surprises that move the market. So the real question is, will there be any surprises? I'm not anticipating any surprises. Pat was saying into the close that maybe we're going to get a little bit more clarity on forward guidance that could move the market a little bit. So we'll see if that happens. But my initial expectation was that it's going to potentially even be kind of a non-event. They're going to not increase interest rates tomorrow, and I think that they're going to signal that they're not looking to increase interest rates at really kind of going forward. I'm sure, as usual, Jerome Powell is going to be super cryptic in his language, so hopefully he says the right things. But if any, like he'll, data dependent, blah blah blah. We're going to leave the option open if we need to be able to increase interest rates. But I think that the Fed is basically done, and it's about time. I think it's finally hit the point where they're starting to over tighten a little bit, and it's not really having the effect that they wanted it to have for a number of reasons. If you read Pat's morning note this morning, which I hope everyone reads it every day, it's really so excellent. I think it was this morning's note, was chatting, and we've seen this data in the past also, that a large percentage of the reduction in inflation coming down, disinflation, I think is the right word, has really been attributed to just supply chains kind of coming back online, and we had that little dip in oil for a bit. The oil's obviously raging again. Um, and it's had much less to do with the hiking in interest rates. And the main reason why the interest rate stuff has not affected the market probably, or has not affected inflation, I should say, probably as much as the Fed would like, is because everyone's still locked in at low interest rates. Um, a very large percentage of America is locked in at 3% interest rates. It's a much smaller percentage of Americans who are unfortunately pretty screwed if you're going out and you're a first time home buyer and you're looking at 8.5% mortgages or whatever it is when it was just 3% so recently, because most people are locked in at 3%. And the people who've never bought a home before are kind of desperate. There's not a lot of supply out there because if you're locked in at 3%, why would you sell your house and then move somewhere else and lock yourself in at 8.5%? It's almost like some people are trapped in their homes and can't sell because they were able to get such a good deal. But as a result, it's not really affecting the average American out there in the way that it may have in the past. And it's really the same thing with most companies. You know, Apple is the one that I go to kind of to mention all the time. And I forget what the exact numbers were, but I remember being in Wyoming during COVID and seeing the Apple. I don't remember what the amount was, like some billions of dollars in 40-year interest bonds or whatever that are at like 1%. Well, they got that money locked in. And I think that that's obviously Apple, and that's an extreme case, but I think that is most good companies recognized. Warren Buffett says it. Don't raise capital when you need to, raise capital when you can. And I think a lot of companies took advantage of that when interest rates were super low. So the only companies that are really getting squeezed right now are some of these growth companies that are newer or trying to turn a profit, and still struggling and still having to raise debt. And that's really kind of a minority. So um, since raising interest rates isn't really driving disinflation in the market in the way the Fed would like, but you're hurting very badly a small percentage of the population that is probably too small to really impact inflation. They probably should just stop at this point, because the people that are being affected by those higher interest rates are really being affected. And if anything, for some of the people that are locked in at like 3% rates and still have jobs and still have money coming in, this is great. You can go get 5% at on a checking account and savings account at some banks now. It's like kind of insane. So if you're locked in at 3% and you got a job and you got disposable income and it's just sitting there in your bank account and you're earning 5%, you're not only not getting squeezed, but this is like the best thing that could have happened to you. So we'll see what happens. I'm rambling a little bit, but I think the Fed needs to pause. I think that they're going to pause. I think they're going to signal no increase in rates, but I also think that's what the market's kind of expecting. So the market moves on surprises. So I think that there's a very real chance that tomorrow we're going to get a lot of volatility at 2 and then at 2:30, but that it really kind of turns into being a non-event. But we'll see. Snapping back over to today's price action, the most notable thing about today for me isn't just this great looking tail that we have in the spies and the Qs where we broke through support but closed slightly above it. It's the fact that we were able to stage an intraday reversal, because the intraday reversal is a hallmark. And I'm gonna try to explain this right. Not sure if Bill is here. I think Bill was out today. He didn't give us our zero DTE this morning. He could probably explain it a little bit better than I could. Um, but it's a function of that zero DTE dynamic. And what we see when the market wants to really break down is that they can change the way that the options trade and the options hedging is happening. We saw that very briefly on these days here on the 15th and the 17th, whereas for really most of this year, definitely since April of this year, it's when I very, very much first started noticing it. Zero DTEs have created these intraday reversals. So one of the hallmarks of this year's market environment, which has really been interesting and unique, and I've never seen it before, but you also have never had, 40% of the options market, which is, options in general are trading more rapidly and with more volume than they ever have in any other year previously. Um, and 40+% of that on a day-to-day basis is happening in zero DTE options. And that's created a market dynamic that, again, I've really noticed and have seen the data since April, creates this environment where we tend to get like a lot of intraday volatility, but relatively little close to close volatility. So what you get, and this is also what we've talked about, is first of all, we get a large dispersion between sectors and stocks, where can have some things being really weak and some things being really strong, but they tend to weigh each other out on an index level. And you also get a lot of, or a decent amount of intraday volatility, but relatively low close to close volatility, which is how the VIX has been able to stay so low. But these ranges intraday are pretty decent, and there's pretty decent movement, and there's a lot of these midday reversals. And the midday reversal is a hallmark of the entering of those zero DTE positions at the beginning of the day for a lot of people, and then and basically the hedging of them and the covering of them in the back half of the trading session. And this entire year, for the most part, definitely since April, intraday reversals and a lot of times they're V bottoms have been more regular than I've ever seen in the market. The exception to that, and this is why I wish Bill was here because I know he could explain the dynamics of how this works better than I can. The exception to that was in August in this sell-off here when the market broke 445 support, and we would get the beginning of the day sell-off, the midday rest, and then instead of the reversal higher like we saw today and like what we've seen for most of this year, actually continuation into the close. And that had to do with just a different dynamic in how the market was approaching options in those 3 days. And again, I that's really the extent of what I can explain on it, which isn't really sufficient. And I know Bill can explain it further because he's the one who originally actually put me on the data and was kind of explaining it to me. Um, but that's what we saw in a big way in these 3 days. And this was really a period of time to take notice of, and it was scary because it showed you just how hard and how fast the market can sell when they decide that they want this market to go lower, and they're pushing it and people want out. The market works at feedback cycles, and zero DT options are like crack to the market. They really are. And I know some people that trade them, and honestly, almost anyone I know that trades them, their strategies scare the heck out of me because if they're caught the wrong way, especially on any zero DTE selling, it can go against you so fast, and you can lose a lot of money. Um, but it's really that dynamic. So basically, what happened today and what makes today so interesting is that we broke major support. And that breaking of that major support in a lot of ways reminded me of when we broke 445 on August 15th. But the price action intraday still gave that zero DTE midday reversal, not the price action that we saw on these 3 trading sessions where we sold into the close. So that's a market, from a market dynamics perspective, that's actually still very supportive. And the volatility is pinned very low also, which is helping to create these intraday reversals. So again, just a really interesting environment, and I think that's actually really important that we had this intraday reversal today because it kind of shows you that the market still has a lot of these supportive flows going on. And for me, and we'll take a look at the IWM for a second because the IWM is still flashing a warning signal. Um, I, I've been very concerned and very bearish for probably a solid week now that we would start selling off once September options expiration hit. And then that was confirmed on Friday. It was kind of confirmed with our bearish rest day yesterday. It was confirmed with the first half of the day today. I don't think we should have been able to turn around this well intraday. Um, I was expecting, honestly, that we were going to see more of that mid-August price action today, where we were super weak. We are getting down to like 440 in the spies, and that we would get another leg into the close. And we didn't. We didn't get it. We got instead we got the intraday reversal. This market for the spies and Qs at least was able to close back above support, and that's actually huge. Here you go, the beginning of the day. We look at super weak. Here's your midday consolidation. We're starting to break down, midday a little bit further. Sometimes that can't lead to follow through, but then you get like what we saw in those days in August was like starting at 2:30 ish. Each one of those days, we'd get these heavy sells into the close, and you get this midday price action, chop up, chop down, whatever, and then heavy sells that last hour, hour and a half. And we got more of our standard price action from this year with this very high rate of intraday reversals that we've been getting, where we actually reversed higher and closed higher. And to me, that's really really impressive. 442.50 was probably the big spot I was looking at for the spies, communicating in the morning meeting how nervous I was about this market. I felt that 442.50 could be a short for today. We can take a look at the small time frame action. I still think that the shorts off the open were some of the best trades that were out there today. And I know that I was very, index focused in those call outs and not really individual stock focused. And it tends to be how I am on the downside of the market. I tend to focus more on the indices on the downside and the individual equities for the upside. I don't really know why that is. It just kind of is. Probably because I'm usually long a bunch of stocks, and then I'm using the indices both as a trading vehicle but also as a hedge. So yeah, the intraday turnaround is just really really impressive, and we managed to close above 442.50 with a downside tail. Who knows what happens tomorrow with the Fed? But generally, this action, this recapturing of support, is supportive for us to maybe even work our way back to the high of the range at 450. But we'll see, one day at a time. Qs were the exact same thing, except QQQ. I think 369 was the level that we were kind of looking at. Yesterday's low is 369.03. The low from the 7th is 369.15. So really 369 was the spot for the Qs. And it's the same picture here. Very weak early on, weak market. Did not make new lows like the spies did around noon, but did reverse higher, got back above 369 and closed well. The concern, once again, like always, and it represents more of your average stock cuts out there, is absolutely the IWM. Lost the 200-day yesterday. We had been talking about the space between 182 and 183 as kind of a major support zone that this market needs to hold. We did recognize that there is a tail on August 25th that goes down to 181.61. We also discussed though that also just shows the relative weakness. There's so many ways in which you can see the relative weakness in the IWM. The fact that it's at the 200-day at all when the spies and the Qs still aren't even close. The fact that it's at and even traded through the August lows today, when the SPY is still $10 away from the August lows. The Qs are, what's the August low for the Qs? 355, let's just call it. Qs are at 370. So, Qs are $15 away from the August lows. And the IWM is just ruthlessly weak still. And with that midday reversal that still affected the IWM, it was not enough for this index to recapture 182 on a closing basis. It ticked back above it on a couple occasions, was not able to close back above it. So the Russell's absolutely a concern. Fed tomorrow, but the biggest positive I can draw from today's trading session is just the fact that intraday reversal was even able to happen. It's always a positive sign when you break through a support level but close above it, because it shakes a lot of people out. In some ways, it can even make the market go up more easily because people that were long get stopped out. I mean, myself, I managed to only get stopped out of one position, but I still got stopped out of something today. I got stopped out of Roblox. I had to manage my risk. Roblox was breaking support on its daily chart. The market was breaking support. That's where my stop loss was. It was at daily chart support. I had to liquidate my position, and roughly ended, I guess, probably break even overall in it, which is a shame because at one point I was up a lot in it. But that's how I trade. I'm willing to give back a lot of open P&L in order to potentially make a lot more. And sometimes that means I give back everything that I've made, and sometimes it means I make a lot more. That's where I like my risk to really ideally come from, is from open P&L, more than just kind of what I've done with Chewy, which is just buy and let that against me. Um, so yeah, really encouraging that we were able to close back all of support, that the intraday reversal was able to happen. It shows that those market dynamics are still in place that are supportive for the indices here, and it's also just technically bullish because, like I'm saying, longs get stopped out, shorts enter, and then they potentially get squeezed as the market goes higher. And then those longs that got pushed out, they're either rebuying on the way up, or at a minimum, they're not selling on the way up, which makes the market move up more easily. So again, who knows what happens with the Fed tomorrow? We'll see. I broadly think it's going to be a non-event, but I could easily be wrong. He could say something surprising. But otherwise, this breakthrough failure, especially if the IWM was confirming it, which it's not, almost looks like we're setting this market to work its way back to the high of this range. Which, if you want to go really big picture, if you guys remember, I've been chatting since the August bottom, basically, how my big picture thesis for this market for second half of August, September, and possibly October is broadly range bound action, and then maybe we work our way higher into November, December, maybe beginning of January, which tends to be um, historically bullish seasonally, and it seems like the market dynamic factors are setting us up for that as well. So, broadly, the big picture thesis is proven to be directly accurate. Today's low is going to be really important going forward. If the spies lose the tail low, if the Qs lose the tail low, that would be very telling. The IWM is still a concern, but overall, breakdown through support, intraday reversal, still supportive factors in the market. It looks like we want to continue to hold this big picture range that the market's in. And it doesn't necessarily mean breakout either. So, you really want to make sure that you've got game plans in place like we had spoken about back in April and May, and we spoke about it a little bit more in August and September, that can actually take advantage of ranges as opposed to getting chopped up, which, I know a lot of us are momentum traders. I know the first trade that I love to teach is simply the breakout trade. The breakout trade works great if you're in an environment like the second half of May, June, July. The breakout trade works not great at all if you're in range bound markets like in April, May, or kind of like what we've seen a little bit more recently, with some individual exceptions for in play names for earnings, things like that. So you need to make sure that you're either being hyper selective if that's kind of where your edge is in the market, and recognizing that it's not the right environment for that approach, and just focusing on those names that are in play, or adjusting your strategies to things that can be a little bit more useful in these range bound markets. So that's really where we are at. As far as individual, yeah, Ben, I'm with you too, but for me that's actually a little bit exciting because I love to learn new things. Um, Ben saying hearing Gem talk makes me want to hang it up because I feel like I know nothing. I'm like, wow, I know nothing. And I definitely feel that. But the more I listen to him, the more I understand what he's talking about. So progress is being made. What else? What else? What else? Oh, individual trading today. Yeah, I stayed relatively hands off. I was trying to be pretty selective with my longs because I was very worried about the market today. Broadly, we discussed that if the market could hold up, and it's certainly an if, my biggest interests were actually in the strongest area of the market and the weakest area of the market. The strongest area of the market basically being energy for continuation. That did not work out, but we recognized it pretty early. I know Chevron was showing some relative strength, but I remember watching XLE off the open and communicating to you guys that the gap's too big, so let's hold off on buying. Let's wait for more information. And then the way they filled that gap in the first 15 minutes is wrong, really. It's not how the market should hold if it wants to be bullish. Yeah, for sure. Sometimes you get those momentum sells of the gap up that fill the gap, and then you do reverse higher and make new highs from there. But it's a lower probability situation. What you want to see in a healthier market, that it digests its gap differently. It bull flags up here for a while, the ADMA catches up, and then you get continuation, or it does pull back, but it pulls back not as deep and more slowly. So you pull back a little, you're like going sideways and pulling back at the same time. as the ADMA is rising, and maybe the ADMA meets price action at somewhere between 92.50 and 92.60, not just a straight sell gap fill. So XLE seemed wrong to me right away. I know Chevron was trying to be really relatively strong compared to XLE. So if you guys were focusing on that, and I did think that this Chevron looked great versus 168 on the daily chart, it just turned out that the XLE was a confirming factor there to not be involved in it. The other thing that I discussed was actually looking at some of the weakest stuff, which is some of these retail names, to see if we could get RDRs if the market could be supportive. And my biggest concern, and I don't want to overly harp on Chewy because we've spent so much time talking about that dang trade recently. But my biggest concern when trying to manage a Chewy would be that the stock was actually trying to show relative strength and trying to hold in and trying to bounce back off the daily chart extension, but that the market would actually be really breaking down. And I do think that that actually had a negative impact on some of these trades, but they still work pretty decently. We talked about Macy's for an RDR. In some ways, this was the best one. It's certainly a cheaper name, so you got to take a lot more stock. But in some ways, this was the best one. It was the strongest one off the open. It did pull back deep, like a lot of things did at this time, but it never broke opening lows, and then had a pretty strong rally above $11. We talked about our general for a long today on day 7 down or whatever it is, very extended for this type of stock. This one was trickier, I think, for the execution. Luckily, I don't think it really suckered anyone in the beginning of the day. And I eventually took it off my radar. But if you were able to stick with this into the afternoon session when it actually broke up, it held those lows and worked okay. And still, closed well, so there's more upside. And Dollar Tree, in some ways, this price action was similar to Dollar General. It sold it very hard early on in the day. Here's where your RDR comes in. So there was one little fake out on that trade at 10:20. But if you were able to stick with that trade or take it the second time around, it held lows and worked really well and closed really well and gave a perfect little tail and increase in volume back through yesterday's low. So this could be setting back up again if the market doesn't break down for a move to 115 or so. So those ones worked out pretty well. And honestly, even this Chewy was finally okay. I'm actually still disappointed with it. The way that it moved off the open and how quickly it got up to $19.50. Obviously, the market was selling and weighing on it a little bit. I thought if the market could have been supportive early on in the day, that this thing would have relatively easily and quickly gotten back to at least $20 today. And it didn't do that. The high, I think, is like 1970 or something into the afternoon session. But its opening move was great. Then the market weighed on it, and then it just kind of struggled to go. And when the market finally went, this thing didn't have the same juice that it seemed to have earlier in the day. But still an okay trade. Back through $19 off the open is kind of the first call out that I had in it. I was able to buy some stock around 19. So finally made a few bucks in Chewy today, but I am still down in the name overall, but I'm also still involved in it, looking for some sort of price or time correction to the ADMA. And then on the short side, this is where the better trades were, in my opinion. Even if they reversed intraday and eventually would have stopped you out, um, the short trades were where it was at. I was just super concerned that this market was going to break down. Off the open, I was like, let's be patient on the short. Let's be patient on the short, like right at the open. And it's because we quickly got back above the 442.50 that we had discussed. There was some extension from the gap, and the IWM was ripping. The Russell got me so excited in the first 10 minutes of the day just to crush my hopes and dreams with the third 5 minute bar. The third 5 minute bar, it was just wrong. Okay, like the second bar, quick little tail in the moving averages, closing at highs, perfect. Third bar, pulls back. I'm like, all right, retest the second bar low. Not great, not the end of the world if we can get two of these candles in a row, a couple tails off those moving averages. Once we really started holding below 182.80 on this third bar, I was like, dang it. I probably used a different word in my head that I can't say on the radio, but I was like, man, this thing is shot. And now at that point, if the spies and Qs break opening lows and now the IWM is no longer strong, this entire market's probably going to be toast. So it was at that point that we were seeing on the third bar the IWM fail that we started looking for the SPY and QQQ short. The first SPY short actually failed if you kept it tight. Call it the short versus the third bar. It tailed up through that, and then that was the real pivot high. The Q1 just held. The high of the third bar right into the ADMA held perfectly. You got these two upside tails here. This in reverse, by the way, was what I was looking for from the IWM. I wanted the one tail and then the second tail for the third bar. The Qs did it on the other side, but it was the third and fourth bar. First tail, second tail, and then heavy breakdown. So we communicated the QQQ short versus this high, and the SPY short versus those two highs. We then communicated the second short versus the 1025 high. You need to be a little bit more aggressive with that. When new lows came in, you could lower your trailing stop to the 1025 high in the Qs and the SPYs, and then eventually with the intraday reversal, you get stopped out. But I really think that that's the best trade that's out there. Is you got the market breaking support, you're being patient the second the market's open because the IWM is being strong and you got the gap, right? Like this is just ideal. This is like the continuation shooting star candle that we always talk about. We spend more time talking about on the upside of the market and uptrending market, the continuation hammer into 5 or 15 minute equilibrium. This is the continuation shooting star into 5 or 15 minute equilibrium, and I love this trade. Um, Especially when the market feels precarious and the IWM is failing, and you got the weekday on Friday and the bearish rush day yesterday. This is just absolutely setting the market up for what eventually was a big break of support. So those short trades were all really good today. And then again, the intraday reversal probably pushed you out, but I still think it was very much the right thing to do. And there's almost no way you could have lost money on that unless you shorted off the third bar and you got stopped out on the fourth bar. But if you shorted versus the fourth bar high or you shorted the Qs, which never shook out the third bar high, it's basically impossible to lose money on this trade unless you really kind of traded it with an atrocious game plan or no game plan at all. Um, so yeah, good stuff there. I think as a team, it was another day of just really good communication on some of these trades. And then, at a certain spot, we were looking for that flip reversal to actually come in. Just a little bit too early because the market made one new low. Like this Rivian, remember calling up the long back through 22 here. It gave you the bounce to the ADMA and then failed. The second low was a little bit harder to capture. But just a number of those names did it. I remember Brant was communicating Carvana off this hammer with the volume, perfect snapback to the ADMA, then fails. And we just got to remember this is what you should expect. When you're taking this trade, they're supposed to fail. It's just that the risk reward is good enough that it's worth taking it anyway and covering most of your position into this move, maybe keeping some for the 21 EMA and keeping a very small position in case that retracement higher actually becomes a reversal. But this move is all you can really ask for. It was a great call out from Brant. Rivian was a little bit tougher. I was trying to do it in Roblox, which was like the worst one. Just did not bounce when those other names bounced, and then eventually stopped me out. I got stopped out on this candle right here at 10:55 when that little increase in volume as this bear flag looked like it was giving continuation. Pretty much right on lows on a pretty big position too. But that, as you can see, is the break of this daily chart support. The daily chart support low had been 26.24. Today's low is 26.12. So they broke that and tailed back up because of the market. So that's all I've got for you guys. Interesting day. I think it's a very telling day for the market also, just the way that we were able to hold in. I think it is a very meaningful trading session, but that meaning could potentially be out the window based on what the Fed says tomorrow. That's all I got. Happy to answer any questions that you guys have. Scrolling up here in the VTF, not seeing questions. I think I'm seeing a comment from Dave from when we were talking about Jim Carson. And I'm probably mispronouncing his last name. He says it with some sort of, I don't know, French accent or something. Hey, it doesn't look like Bill is here, but the latest on Gem is this quick segment on the Schwab network. He kind of talks about the option flow that you mentioned compared to macro factors. Something to pay attention to if we don't get a surprise tomorrow, in my opinion. Also, you got to ask Jim about learning material or something for this stuff when you see him in Vegas. Will be helpful for folks. I think that if you pay for his stuff, there's all these primers and everything to teach you everything he talks about. I don't pay for his stuff. I just basically get, some of the free monthly. I pay attention to that free monthly video that he puts out, and some of his stuff that just goes on general networks like what you're posting here. But hopefully I get the opportunity to have a chat with him, and I'll mention it. Ben Con knows nothing. He knows nothing. uh, Dave saying I'm mostly trying to grasp Vanna and charm flows, because that's what I believe is a big part of this mean reversion every day. Yeah, and that's one of the bigger things that I still don't really understand. It's just a little bit beyond me. It's especially hard as someone who doesn't really trade options to try to figure out you know, the depth of some of these Greeks. The DGRDR worked well. Yep. Um, Ben Con saying, from my 1 to 2 years of watching them, I've narrowed it down thusly. So you've been paying attention to him for longer than I have. After the monthly SPX OPEX, there's a brief window of opportunity for momentum to shift to the downside. Or just, I think, from my understanding, just off your first sentence there, it's not necessarily momentum to shift to the downside. It's more of a loosening of the market that can enable the market to break down harder to the downside, which I think is usually where the chatter comes in, but also actually to the upside. If it doesn't, those structural flows just come right back in and prop things up. And then that's where you get the tighter, grindier markets. But yeah, Ben, for sure. From Ben B. How do I pronounce your last name, Ben? Ben Boches or Boches? Boches? Say A if it's Bocus. Okay, there we go. Ben Bocus. Uh, what are your thoughts on my XLE short at 1040? 1040 in XLE versus little high on this failure, I'm assuming is what you did. Let me read. First shooting star high. I was still long Chevron, but was looking for a short to hedge it a little, and the XLE was really weak, and the market looked like it wanted lower at that time. Yeah, so I normally don't like doji candles that are in range and in equilibrium, especially post 1030. So that'd be the first thing I would say. Normally, I don't love that. In this situation, I like it a little bit more than I would otherwise, just because of kind of the other things that you're saying here. The broader weakness, the fact that you were actually long Chevron at the same time, I think is an added reason to kind of hit the bid here on this trade. Um, and the way that they sold this thing back down to flat. But a lot of the times, these dojis that come in here are really coin flips on whether or not they work. So most of the time, I do not like dojis that are in the gap fill area, in the equilibrium area, in the price congestion area. But today, I think was a little bit better probably than usual. So thank you, Ben Bocus. From Dave S. The TLDR is that what does TLDR stand for? Is that people open positions and then close the positions. Um, Too long didn't read. The too long didn't read. I don't know any of the acronyms that the kids do these days, like in text and stuff. I'm just getting too old. I can't keep up. Uh, the too long didn't read is that people open positions and then close the positions, and that the closing of the positions means that dealers can remove the hedges, and that is either bullish or bearish back towards where the move started. Right. So that's creating the intraday reversals. And then I guess the too long to read add-on where what we were seeing in August was actually the opposite. That instead of closing those positions, they were probably rolling those positions out a little bit further, maybe using like 1 DTEs or something to push the market further and capture more kind of downside there. Um, that's kind of what I think is going on that I was trying to get across to everyone earlier. But yeah, I'm still learning too, so it's good stuff. Thank you, Dave. Going over to the YouTube over here. Um, I haven't heard you trade imbalances in the past, but thought I'd ask if you or anyone in the VTF have trade setups for maybe scalping those imbalances before the open and at the 355 close. So I don't trade imbalances. I don't really think that anyone who's active in the VTF trades imbalances either, but I know traders who trade imbalances. Almost all of them do it algorithmically. Almost all of them. And the two people that I know who still trade it manually baffle me on how they're actually able to do it. And I really don't know how they're able to do it. Everyone else I know that does it with any margin of success, it's all done with robots who can make the decision in microseconds when the imbalances are hitting at 350. Um, and the manual one of the manual traders I know, they'll somehow put on like dozens of positions in under a minute when imbalances hit, and they're particularly active around quad witching, the Russell Shuffle, end of the month, things like that. So again, yeah, I don't really have anything for you on trading it. My thought process, which is definitely not a fully accurate thought process because I know people that do it manually and are successful, but my thought process is that it can't be done manually because it's a game of speed and you're competing with the robots the second those imbalances hit. And it's a scalping game that we have no advantage on as manual traders anymore. Again, asterisks. I know two people who are able to do it successfully, and they do it manually. From Robert, great job to get on the panel with all those people in Vegas. Do you know if there would be some online streamer recording? I don't know. Josh Leffler would be the person to ask. I'm not sure if he's tuning into today's afternoon meeting. I don't think it's going to be live streamed. There may be recordings after, but I really don't know. From Robert. Also, in what case would I be reopening Roblox at the low of the day? In no case. At 11 a.m., also the queues were bottoming, and 367, which is my daily level, and Roblox was at daily support. Yeah, I mean, Roblox broke daily support, and it really just shook out the daily support and shook me out. But I really try to keep my trading very simple. If I'm getting stopped out of a position, my stop was there for a reason, and I find that getting back in and fighting stock hurts me way more than it helps me. Today it would have helped, but more times than not, I end up losing significantly more money by trying to re-enter those trades because they're actually failing than on the occasions when something like Roblox happens and I get back involved and it reverses all the way up and it works out really well. So again, generally for me, I would say, in what case would I get back in? In almost no case. Good to see you, Mike. Good to see you, Mike, there on YouTube. Thanks for the comment. From Bryant. Not sure how I miss when trades are called out. I can never tell when the stock was entered. Maybe it's something I'm missing. I feel like I see them called. I already missed the entry. It sounds like kind of you're just asking me broadly and generally. So the first thing that I would say is that I'm posting all of these ideas, most of these trade ideas, here into the VTF at 9 a.m. right when I'm doing the meeting. So the first thing I would say is refer back to that. Obviously, what I post at 9 a.m. can adjust as the trading session is ongoing, as we get more information or more clarity based on what the market's actually telling us. But based on 9 a.m., I have a game plan. I've got certain individual names that I'm planning on looking at, and that's that. That's one. Two is I do my best to communicate what I'm in, when I'm entering it, broadly how I'm managing risk, broadly what my game plan is, when I'm selling a piece of my stock or all of my stock or liquidating a position or getting stopped out or whatever. I was very communicative, for example, on my Roblox stop as it was bear flagging right in front of that daily support. I know I called out Chewy as a long back through 19. I know I called out very clearly those shorts versus highs in the market. So uh, a lot of what I'm also doing that maybe you're getting confused in the noise is communicating. Like I combine day and swing trading. So a lot of the times I might be communicating a position that I'm already in from previous days. And I say I'm selling some here, I'm selling some here, I'm selling some here, or I'm buying some here, I'm buying back some here, I'm adding back some stock. That's just position management a lot of times around other things that I was already in. as opposed to something that's new. Um, but when I'm calling out a new trade, I might be saying like I did with the market today, um, as we tailed into equilibrium, hey, I think you can try Q short versus the high. That's a trade call out. Hey, I think you can try the Q short versus this 5 minute high. Or I was being patient initially on the way up, and then here at 10:25, as we start to move lower, I was like, hey, I think you could try the spies of the Q short versus this 5 minute high, the high of this 5 minute candle, the 10:25 high. I don't know how to make that any clearer. Um, I'm I trade a lot of volume on most days, but I'm actually a very selective trader. I trade very selectively. Once actively engaged in a game plan for a position and I'm day trading it or I'm swing trading it, I tend to trade that name very actively once I'm actively engaged in it. But new trades and new positions that I call out on a day-to-day basis, I don't call out a ton of them every day. Because again, I'm very, very selective on that. Tend to be selective with better risk reward and higher hit rates, as opposed to to give a shout out to like J.R. Romero, who runs that Newsbeat room, who did an interview with Greta recently. JR is great. I speak to him on the phone a decent amount. He's a really, really good trader. And it's funny because he and I look at a lot of the same stuff technically with trading, but he trades a lot more trades every single day than I do, and he's probably looking for a little bit less on a risk reward basis than I am, maybe a little bit less on a hit rate than I am. So he's therefore much less selective and has a lot more new trade callouts on a day-to-day basis than I do. But I definitely am having trade callouts every single day, and I had plenty today on both sides of the market. A lot that worked, particularly those market shorts, I think were the best ones, and others that didn't, and others that genuinely didn't. I called out. Actually, this worked. I called out S versus the low here, and that worked. For some reason I typed it up because I thought it failed, but I remember it just took a long time to work. It got very stuck here. I was offered at 26 cents, and this high was 25, and I thought it was going to push me out as I was getting stopped out of Roblox, as Roblox was making that new low, and Roblox was one that I also called out for a long that failed. And then you had Big Brant calling out the Carvana long, and that worked to a degree and then failed. So the callouts are definitely there. I'm not sure if you just need to tune your ear a little bit better. But the final thing I wanted to say um, was that I don't think that my trade callouts or Josh's trade callouts or Pat's or Brant's or anybody's callouts are enough for you, because you need to know yourself. You need to know the types of strategies that work best for you. You need to know what your risk tolerance is. So I'll call out when I call out a trade or I put an idea into the list here in the morning. Um, you you want to make sure that that trade actually works for you, and that you're not just necessarily following me into something because my risk tolerance is probably different than your risk tolerance. My account size is probably different than your account size. Maybe yours is bigger, maybe yours is smaller, but it's probably not the exact same as mine. Mine is decently big at this point, I think. So yeah, um, I hope that helps. Also, I would say, because I know that you're relatively new to the team here, if you haven't already, make sure you watch the training program classes, which are also, you should have access to those through T3 Live. It's like 12 or 13 training program classes that I built out. If you go through all those classes first, I think you'll have a much better understanding of the communication and the callouts that's actually happening here in the VTF on an intraday basis. So definitely check those out if you haven't already, and they'll probably be pretty helpful for you. Cool. Yeah, for sure. And check out those training program classes. All right, gang. Looks like I got through everything on YouTube and the VTF. Have a great night, everybody. See you all tomorrow.